Holy smokers, folks, this ain't no dang jokers. Wall Street was not shy about dumping Tesla stock on the market here today. Tesla stock down about 7.5% here today, 7+% downward move. Palantir stock down big as well. We're going to talk about Tesla stock. We're going to talk about Palantir stock. What's going on with those stocks? Why is Wall Street dumping shares left and right of Tesla stock right now? And I want to give my opinion on that. We also, we got to get into these bank earnings, okay? And I saw some really troubling things in those bank earnings that I want to share. I also saw some good news in those bank earnings I want to share. Okay, we got to talk about the markets in general. Yesterday, big up day, right? Today, big down day. Folks are looking at the market like, okay, where are we headed here? We had one great day yesterday. We have one horrible day here today. What does this all shake out to? Does it shake out to the market's just not going anywhere for the next couple months? Are we going to go down more? Are we going to go up? You know, a lot of folks are kind of looking at that, right? So I want to give my opinion and perspective out there. A lot to discuss in today's video. I appreciate each and every one of you that come to enjoy the videos each day, even in this bear market. I appreciate everybody that subscribed to the channel. Thank you so much as always. And also, if you want some free stocks from moomoo for a limited time, check out the pinned comment down there. Right now, you can actually get up to 15 free stocks with moomoo. You can even get a free stock for just setting up an account. And basically, the more you deposit, the more free stocks you get from moomoo. So definitely check out that. That will be pinned comment, and that is for a limited time there. Okay. So let's start here at earnings. Okay. The big banks. Wells Fargo adjusted earnings were supposed to be down about 3.5% to $1.13 a share, and revenue was supposed to come in at $18.77 billion for Wells Fargo. What happened? Well, Wells Fargo quarterly earnings fell 27%. Oh boy, okay, to 85 cents a share. That's a disaster. I mean, that's nowhere even close to this number, right? Revenue rose 3.7% to $19.5 billion. So this is never a good situation, right? When revenue way better than expected and earnings way worse than expected, and if you're some massive growth company or something like that, you can get away with that. You can totally get away with that because it's like we're growing for the future. We don't care about our bottom line right now. We're just about growth. Wells Fargo's not that company, or even their whole company is based upon that bottom line, right? As with all these big banks, so they can't come in and just report that bad of a number. Like that's really, really bad, right? And this is an issue we're seeing with several different companies around several different industries where revenue's up and earnings are down, and some down in a considerable way. The company said its net interest income spiked 36% due to higher interest rates, loan balances, and lower mortgage-backed securities amortization, while non-interest income fell 25% on declines in mortgage banking, venture capital, investment banking. Mortgage banking is going to continue to be bad for a while, okay? Wells Fargo noted $2 billion in operating losses from litigation. We know Wells Fargo's always in a bunch of stuff, okay? This one is the most important earnings by a mile when it comes to the big banks, okay? This is the big one, okay? JP Morgan Chase. And JP Morgan, by the way, is a stock I personally own in my dividends account. Watchers expected JP Morgan's earnings to drop 22% to $2.90 a share, while revenue was supposed to climb 8.4%. Well, JP Morgan's earnings fell 16.6%. Okay, that's better than expected, right? That's a good sign, but also a bad sign because they're still down 16.6%. That's not ideal, right? And revenue was up 10.3%. Now, this is almost shocking, right? Because there you are, you see somebody like a JP Morgan report revenue up double digits, earnings down double digits percentage. That's almost something you never see in the stock market, to be quite frank. That's no bueno. JP Morgan added $808 million to the credit reserves during the quarter, driving lower net income. So it is something to remind yourself of there. That is important, okay? If it wasn't for that, their net income would have been in a better spot than what it was in, okay? Compared to last year when it released $2.1 billion from its coffers. So do keep in mind, it had this kind of great thing working behind its net income behind the scenes, right? To now this has this situation that's hurting its net income in a considerable way. So that is just something to remind yourself of there, okay? Net interest income was up 34% thanks to higher interest rates, but non-interest revenue fell 8% on lower investment banking fees, losses in corporate securities investments, and lower production and home lending, okay. That's where the banks are obviously having a lot of trouble right now, okay. So that's JP Morgan. Morgan Stanley. What happened here? Well, Wall Street forecasted for their earnings to drop 25% to $1.52 and have a 10% revenue decline. What did they report? Well, Morgan Stanley adjusted earnings fell 25%, so right in line pretty much with expectations, maybe a slight beat, while revenue dropped 12%, so revenue's even in a worse situation for Morgan Stanley. Morgan Stanley's investment banking revenue and investment management revenue tumbled 55 and 20% respectively as capital market action slowed, okay? So there we are. We're in a moment where we just saw all those banks report there's two sides of it. Revenue, if you just looked at the revenue line items, you'd be like, okay, things are all right other than Morgan Stanley there, right? But the earnings were obviously very, very troubling. Now, if I was to just give you that information there, and I just told you, here's what the company's revenues and here's what's going on with their earnings, and I asked you, okay, what do you think is going to happen with their stock prices today based upon the information I just gave you, right? I think anybody would look at that and they'd say, okay, if that's the only information you're giving me, well, with earnings being down that much, which is, double-digit percentages, I would expect those stock prices to be down big here today, right? But what actually happened with those stock prices here today? And this matters in a significant way. Well, I forgot we had Citi. I'm sorry, guys. I forgot we had Citi. I thought we were going to stock prices. Citi's earnings, they were down a lot as well, okay? But what happened with the stock prices? Well, actually, it was decent. Wells Fargo was up today. JP Morgan was up today. Citi was up today. Okay. That's interesting, right? And so you see those stock prices actually green on a horrible day for the market. And it might be like, how does that make any sense? All those earnings were down massively for those companies. Why would their stock prices be up today, right? Remember, all those stocks have been hit very heavily already going into this earnings. Also, expectations were very low for those banks, right? Look at how much analysts had expected earnings to go down. So the stock prices were already very compressed. Analyst expectations were already on the floor for those. So they come in, and a lot of those were disappointments, either on revenue line items or earnings line items, and the stocks actually went green on a horrible day for the market. Now, if it was actually a good day for the market, a lot of those stocks probably would have been up 3, 4, 5, maybe even 6% today, but because it was such a horrible day in the market that they were only able to have, 1% type moves, right? But that matters in a significant way. And that's where you get into the expectations. And as we get into earnings season, keep this in mind with a lot of different stocks in the market. Some of these stocks have had their stock prices destroyed, and they have had basically a situation where analysts have no expectations for a lot of these stocks. And so I think there's going to be a lot of stocks that had 10 to 20% plus pops in this earnings season, essentially, and see their stock prices absolutely fly. I don't know if it's like a long-term move, but at least the day after earnings, I think there's going to be countless stocks that have 10 to 20% plus moves. It's going to be a very interesting earnings season, and we just saw the first start of it there with banks, okay? Now, horrible day for the market here today. NASDAQ down 3+%, Russell down 2.6%, commodities index, which is good. We need to see commodities continue to go down about 2.5%, S&P 500 down 2.3%, and the Dow Jones Industrial Average lost over 400 points here today to be well under 30K now at this point in time. So obviously not good, right? It was interesting in the middle of the day, there was kind of a spike in margin call. So, you never know how all that's working out. In terms of my opinion, as far as margin goes, I think, I think if we were to see the actual data, which we can't, we'll see it in like 2 months from now. If we were to see the actual data of how much margin's outstanding right now, I think we're all the way back to like probably 2017, 2018 levels now at this point in time. I think most people have gotten margin called in a massive way this year, and it just went through kind of phases. And I think you're kind of getting the final phase of the margin call, folks, right now, essentially. And so that's healthy for the market over the long term. Obviously, it's devastating the market in the short term, because if you get a margin call and you're forced to sell stocks, like, it's not ideal, right? You're selling, and you're adding more selling pressure on the market, which we've wiped out hundreds and hundreds and hundreds of billions of dollars of margin debt this year. And, I think we'll probably see a trough for margin debt, I think, probably in either October or November, to be quite honest. I think that's when we'll see a trough in kind of margin debt. And then we'll probably not see it go up in a substantial way anytime soon, because people are going to be deathly afraid of margin anytime soon, to be quite frank. So I think it'll just kind of chill for quite some time in regards to that, right? Now, look at this. This is crazy, okay? So where are the markets at right now? Well, specifically the NASDAQ. This was as of yesterday at one point. The NASDAQ is down almost 38%. Think about that in less than a year. That's an extraordinary move. And so when you talk about, potentially the worst year in the history of the NASDAQ, if we don't get a big rally, which we'll speak about that in this video, if we don't get that November, December rally, it will be the worst year in the history of the NASDAQ. I'm kind of almost rooting against a rally in November and December. We're likely going to get it, and I'll cover that in a moment. But I'm kind of hoping we don't get it, to be honest, just because it would be kind of epic to have been in literally the worst year in the history of the NASDAQ. And that's the pace we're on. The worst year ever was 2008 for the NASDAQ in the history of the NASDAQ. And the NASDAQ was down just over 40%. It was like 40.5% or something like that. So we're right there, man. We're right there. We're getting real darn close now at this point in time. So, just an extraordinary kind of move down there, right? Now, Tesla, massive move down here today, 7.5% for good old Tesla. And, this is a stock that folks have definitely looked at in the market and said, okay, we can't bottom out this market until Apple and Tesla really get hit in a substantial way, right? Well, at least in terms of Tesla, it's gotten hit in a very, very substantial way, right? Before we get into, I just want to check something real quick because I didn't actually get to see this, and I didn't cover this in the video, and I just want to take a quick peek here about kind of what happened at these other big tech stocks here today. So Tesla led the most. Wow, Nvidia down to 112 here today. AMD down to $55 here today. Holy smokers. Amazon down to 106. Could Amazon go under 100? It's flirting with it. Oh boy. Okay. Wow. Oh my gosh. Okay. Yeah. Today I didn't, I've been trying to cover AMD and Nvidia quite a bit because those have been in the news, but not today, but my gosh. Okay. So good old Tesla. What happened here? Well, Wells Fargo, they cut their Tesla price target, and they're citing rising interest rates, which is obviously an issue that everybody with a brain should understand that that's an issue, right? Interest rates keep going up. A lot of folks obviously buy Teslas on loans, and, the interest rate environment is not ideal. And so that's not a good thing. And there's just overall worries about kind of Tesla stock in general. Now, in terms of Tesla, their earnings are coming out in a few days, right? October 19th. And there's a lot of concerns around Tesla in regards to, because, why is the stock lost over $500 billion of market cap in 2022, right? There's a lot of concerns around what's going to happen with Tesla in a recessionary environment. And that's the way folks are looking at this. They're saying, okay, Tesla, who's going to be buying 60, 70, 80, $100,000 plus vehicles if we're in a recessionary environment in 2023? That's the way Wall Street's looking at it, which they're all convinced there's a recessionary environment in 2023, right? And so that's something that worries folks, and they don't know, and none of us honestly know. Even us Tesla bulls, we don't know exactly how well Tesla will do if there was a real recessionary environment, like really bad in 23, right? Which there's a whole debate if that's even going to happen. But if it did, how does Tesla perform in that? We don't know as of right now, right? We got to wait for that to play out. We can't say for sure, things are going to be great. I think it would be almost borderline ignorant to just say, Tesla's going to be in a perfect position regardless of what happens in the economy. I don't know about that. We'll see. And this is something I spoke on, many times over this entire year, is kind of my worries around that. We'll time just has to play out here. This is Tesla's first ever real true recession to go through, right, in terms of being a grown-up company. Because they went through the great financial crisis, but Tesla was a joke back then, right? They had the Roadster in the market, and they didn't even have, the Model S or Model X or anything like that, right? So they weren't a grown-up company. So in this situation, we got to see, what does that mean for their earnings? What does that mean for their revenues? We don't know. Maybe they get through this and it's not very bad. Or maybe it's a situation where, they're not hitting their numbers. Time just has to tell there. For us long-term and Tesla investors, we don't get too caught up into whatever is going to happen short-term, obviously. But for a lot of the market, they do, just to be quite frank. And a lot of the market gets caught up into, Tesla's at 204 today, but what if it goes to 150? And that's the thought process there, right? And going into earnings where a lot of people are scared, right? That's why you get a big sell-off in a stock like Tesla here today, and that one's down almost 50% now year to date at this point in time. It's been absolutely nailed. And like I said, over $500 billion of market cap just wiped out just since the beginning of this year. That's an extraordinary move there, okay? What about Palantir? What's going on with Palantir? Well, the truth is, there's no big news with Palantir here today on why that stock's down, almost 7%. The only thing I could think potentially on why Palantir got pulled down so bad is I was thinking like maybe there's a little margin call activity from folks that also own Tesla stock here today, and from some of the more, let's just call it aggressive players in the market that might own Tesla and own Palantir and own some margin out there. And, a lot of folks that own Tesla stock also own Palantir. I found in those stocks kind of attract each other. Obviously, Tesla has this unbelievable growth company, right? And a lot of people view Palantir as kind of, Tesla of 2018 is a lot of what a lot of people view Palantir as. And they view Palantir as like this 10x to 20x opportunity over the coming years, right? So they attract very similar folks. And even myself, I'm one of those folks, right? I own Tesla stock, and then I've started buying Palantir very recently. So I even fit into that category, right? And some folks maybe got some margin calls here today because Tesla was down so much. I mean, it's been getting destroyed, right? And then you add another 7.5% move here today. Maybe you get some margin call stuff going on. And next thing you know, you got to dump some shares of Palantir as well, right? And so that's definitely a potential. But I didn't see any major news on why Palantir stock was down nearly 7% here today. That's just my thought process, is maybe a little margin call activity. And when you already got a lot of selling pressure, you can get a few players that maybe were a little too aggressive and get margin calls. And the problem with margin is some people look at these prices, right? And they say, how can it go any lower, right? They look at Palantir, let's say once it fell under 10 and they start margin and they're like, dude, it can't go any lower. It's under $10 now. And then it goes to 9, and then it goes to 8, and then it goes to 7. I've experienced this firsthand where there's so many stocks I hold right now that I'm like, I can't believe that stock is trading at $3 here today, or $4 or $5 or $7 or whatever, right? And that's just the sort of market we're in. You got to understand, in this sort of market, any price is possible on the downside. When you're in a raging bull market, let's go back to late 2020 into early 2021. Any price was possible for a stock on the upside because it was just mass momentum and FOMO and excitement and just, we're going to the moon, right? And, you could throw almost anything out there for price and it was possible the stock was going to hit it. Same exact thing works on an unbelievable crashing market, which, look, yesterday at one point the NASDAQ was down almost 38% in less than a year. In that sort of market, oh gosh, man, you can throw out almost anything. People could say Palantir could go to 5, to 4, anything's possible in this sort of market. So the problem is margin sucks in a lot of people. When things go down, they're like, it can't get any worse. And then it gets even worse, right? For the stock price. And they're just like, how is this happening? So that's my only thought process around that. Okay. Now, in terms of stocks I own, there was only 2 green stocks in my entire portfolio today, which shows how rough of a day it was out there. Avon Brands had a nice day today after their earnings that came out about 36 hours ago, which their earnings were absolutely incredible. I did a whole breakdown of their earnings on my small new channel, which is called Jeremy Lefebvre Makes Money. By the way, I got a free course that's linked in the description down there if you ever want to check out that. It's a free stock market course for you guys. I just actually made that free here today, so I don't know how long I'll keep that, but that'll be in the description area down there. And then JP Morgan was also a green stock here today, which is a stock I own in my dividends account. Outside of that, it was Red Dead Redemption out there, just red, across the board, and some nasty movers there, okay? Now, I did the video a few days ago on the stock market set up for an epic rally, right? And in that video, very important part of it is I said, don't get caught up into whatever happens over the next 2 days, right? Meaning essentially yesterday and today, because they could be very misleading on if we're going to have the epic rally or not, going into November, December, right? And the reason is when you get CPI like that and then to a day like this, it can, if the market moves up on those 2 days, it doesn't really give you, if you're thinking about an epic rally, right? You're not talking about a 2 to 4% move. You're talking about like a 10% plus move. So you're not going to get the information or intel if the stock market was down both these days or if it was up both these days. We got a mixed bag, right? Which one day was up big, huge recovery. The other day is down big. So we got a mixed bag here. That's why you don't even get caught up into these 2 days. Now, where you're going to really find out if we're going to get that epic rally, right, or not, is over these next few weeks. And the reason being is this is when we're going to start getting the gauntlet of earnings out here, right? And then essentially, there's definitely a belief that there's a possibility of a major rally in November, December for all the various reasons I went over in my epic rally video, which you can go watch that if you need to get caught up on that, essentially. Okay, there's a lot of reasons. And so if you're going to get ready for that, you have to start positioning over the next few weeks so you can position before everybody else starts to position, right? So the early people are going to start likely adding over these next few weeks and positioning like that. And then the ones that are a little more cautious won't start adding till like early November, right? And then all of a sudden you can get a pile-on effect if the market starts moving in the right direction, which I obviously covered in the epic rally video there. So, these next 3 weeks are going to be very, very important for the market and for stocks in general, and to understand if, people are going to start positioning ahead of, what could be potentially coming there. So once again, if you didn't get to see that video, definitely check that one out there. Hope you guys enjoyed this video as always. Once again, check out the pinned comment down there. Limited time, Moomoo's doing up to 15 free stocks. So that is the pinned comment down there. Much love as always. Appreciate everybody for joining me and being subscribed to the channel, and have a great day.